Hi there, Market Insights watchers. Well, in Market Roundup, January jobs numbers are out, and we just have one word to describe all of it, and it's wow. My goodness, stay tuned for that. And in tech megatrends, global investment in the energy transition market hit a record high. So we'll discuss that. And in Crypto Corner, Ian will share his latest take on digital currency market in general, including a crypto he says that we should be looking to buy now. So let's begin. Plus, of course, if you're watching us on the Banyan Hill YouTube channel, please remember to like and subscribe to this YouTube channel. We love to have your support. And last but not least, if you haven't done so already, please make sure to sign up to listen in on Banyan Hill's biggest event of 2024 coming to you this month. Ian and the team have spent the past year working on an AI-driven trading system that works to send stocks soaring 72% in accuracy. So to tune into this event, please sign up via the link in the email accompanying this video. Hi there, Ian. How are things going today?
I'm good, Amber. Excited about the Total Wealth Symposium. Getting ready to go to Orlando and see some of our favorite people.
Of course, I'm very much looking forward to it. I am packed and ready to go.
All right.
Yes. Looking forward to, if you're attending Total Wealth Symposium, we look forward to seeing you there in Orlando. Okay, everyone. So we'll get started in Market Roundup news. Like November and December's 2023 job report, January's 2024 report this past Friday showed U.S. employers hired at a breakneck pace, and workers saw robust pay gains. Stocks powered higher on the news. This jobs data actually supports and foretells, I'd say, potential strong economic growth in the months ahead. Non-farm payrolls increased 353,000 last month following upward revisions to prior 2 months. The unemployment rate held steady at 3.7%, coming in better than expected 3.8%. And wages also accelerated, they moved ahead. But overall, payroll gains exceeded all economists' estimates. Job gains were seen in professional and business services, healthcare, retail trade, and social assistance. So to quote Chris Anstey, a senior editor at Bloomberg editorial, quote unquote, needless to say, this is very far from recession territory, end quote. So what does this all mean? Well, as I said, after the better than expected November and December jobs report, the Fed will have to hold rates higher for a while longer. After these blowout jobs numbers, checking the latest Fed rate cut probabilities table is now just a 23% chance of a rate cut in March and a 68% chance of a rate cut in May. So Ian, what's your take on these numbers? They keep confounding everyone.
Well, we talked about this a couple of weeks ago. You know, this idea that we initially were talking about landing the plane, right? Was it going to be a hard landing or a soft landing? It appears the plane is not going to land.
Yeah.
Right? It's like one of those planes that's heading for the runway and then it just reaccelerates. There's no landing right now. So you know, that is good for stocks. The economy is still moving. A couple of things that I've noted, because it's been a huge week for the markets. We've had all these big tech earnings reports, which, by the way, a number of those tech companies are laying off. So even though we had robust jobs growth in January, the February number might be a little different.
Right.
Also, like, we had productivity that came in. So the fourth quarter productivity number prior to that was revised up to, I think, 4.9%, which goes to show you that the economy, businesses, consumers are figuring out how to do more with less. Lastly, I just want to show everyone the true-flation chart. So this has kind of been like our guide throughout this, you know, this inflationary period and what to expect. True-flation is showing 1.34% inflation in February. I mean, this is like falling off a cliff right now. We're probably going to get to about 0% this year, Amber. And if you have the economy still growing and the Fed seeing that inflation is basically not existent, you know, 2% was their line in the sand. The government reported rate obviously is 3.4%. It's higher. I think this has a higher weighting in rents, which have fallen lately. Just goes to show you that, like, you know, it's like the economy is not overheating and inflation is coming down, should give us another strong year in stocks. Now, let me just go back on this year. So this only goes to 1 year, but Uh, so year to date, basically, a year ago, we were at 6%,
Mhm.
and we've fallen. Looks like we had a little bit of a reacceleration into the fall. I remember when rates went up to 5%, U.S. interest 10-year rate, and then all of a sudden it fell and stock and actually this led the interest rate decline. So when the trueflation rate looks like this, I mean, this looks good for the stock market from my perspective. The fact that inflation is falling off a cliff, jobs numbers still look pretty strong. We were expecting a rate cut in March, but now after Powell spoke this week and also with the jobs data today, if you look at the March contract, I can just show you right real quick. Uh, there is basically a 78% chance there's going to be no cut. A
Mm.
week ago, there was about a 52% chance that we were going to cut. And a month ago, it was 21% chance or sorry, it would be 80% chance that we were going to cut, right? So now it's like it's likely they're not going to cut in March. Probably going to have to wait till we get closer to summertime to see that first rate cut. But as far as what we're seeing from inflation right now, there is no chance that there's going to be a new hiking cycle. The Fed is done raising rates. We're now in a period of rates are coming down. The question is, how quickly are they going to come down? And how much of an impact higher rates as a lagging indicator have had on the stock market. So far, it's not been that bad at all.
Right. Oh, excellent points,
Mhm.
Sir Ian Schick. Thanks for sharing those charts, especially Trueflation. Always mind opening to watch Trueflation.
Yeah, sometimes it's good to like look at stuff that is outside of what the government's just telling you, right? So
Mhm.
people make these indexes that are based on real world economic data,
Mhm.
and they put them in there, and that trueflation chart has really held, since the end of COVID when we had that inflation spike.
Right.
It showed us that 2 summers ago in 2022 that inflation had peaked at 9%. We were talking about on Market Insights, and what happened? The market inflation had peaked and the market bottomed, and we started rallying from then. So we're sticking by that until it stops working.
Concur there. Okay, let's turn to tech megatrends. A global investment in the energy transition market actually hit a record $1.8 trillion in 2023. This is a 17% increase over last year. Now, according to Bloomberg NEF, electrified transport or electric vehicles was the main driver for this clean technology spending spree. They say, quote, leapfrogging renewable energy and accounting for more than a third of the investment total. China was once again the largest market, although Europe saw the fastest growth, end quote. So as seen in this chart, electrified transport, indicated by the green bars in the column, surpassed renewable energy to be the largest driver of spending in 2023 at $634 billion, up 36% year over year. Meanwhile, renewable energy gained as well, rising 8% to $623 billion. Now, BNEF notes that, quote, there was also strong growth in emerging areas with investment in hydrogen tripling year over year, carbon capture and storage nearly doubling, and energy storage jumping 76%, end quote. So in this chart, you'll see that power grid investments in the light blue bars, our megatrend topic that we covered last week, Ian, where we discussed AI and power grids working together,
Mhm.
also seeing some investment money pour in. But in all, China continues to be the largest contributor to energy transition investment, comprising 38% of the global total of the $676 billion. The US was second, spending $303 billion, while the 27 members of the EU saw a combined $340 billion in investment. And lastly, what's most notable is investment in the global clean energy supply chain, which includes equipment factories and battery metals production, hit a record at $135 billion. And per BNEF data, it is set to surge further over the next 2 years. So this is definitely a trend to follow. And I'll leave it with this. If you're not yet a subscriber to Strategic Fortunes, please do so. We cover energy transition positions and so much more, you name it. And you can learn more about Strategic Fortunes by clicking the bull icon right here over my shoulder to join the Strategic Fortunes family today. So Ian, what's your take on
Awesome.
energy?
Well,
Always
you
something.
know why China and Europe are quickly trying to add alternative energy, right?
Oh yeah. Mm-hmm.
You know the reason why?
Yeah, well, I'm thinking war and conflicts and just wanting to be
Yeah,
independent on their own.
exactly. So
Hmm.
China and the Eurozone don't are net importers of
Hmm.
natural gas and energy. The Eurozone in particular relies on a lot of Russian oil and gas.
Hmm.
And what we saw in March of 2022, I don't even know how long ago that happened because the war's
Yes.
been going on for so long. When Russia
Hmm.
invaded Ukraine,
Hmm.
the price of electricity in Europe spiked dramatically, and there were reports in the summertime that people in Italy were spending thousands of dollars a month on their electric bill. And at the time, the EU ministers appropriated something like $800 billion in subsidies for renewable energy.
Hmm.
And the U.S. Thankfully is now a net exporter of oil and gas. We have more in our country right now, and actually, it's a dirty little secret here. Like we've been pumping more oil and gas now than we ever have in the past.
Hmm.
But that's one of the reasons why we aren't adding as renewables as fast as everybody else, right?
Right.
China, for instance, doesn't have oil and gas, so they've got to add renewables quickly.
Hmm.
One thing also I want to talk about, Amber,
Hmm.
when it comes to renewables, right? You showed this chart where it talks about how a lot of the gains have come from the electric vehicle sector,
Hmm.
and we've covered this. There's been a lot of negative sentiment out there about EVs. They're too expensive. The batteries, are too dirty. They're not as clean
Hmm.
as we presupposed. I just want to share this table with viewers, and this comes from a Twitter account named Car Dealership Guy. And this is a gentleman who owns a bunch of car dealerships, and he talks about the industry. And what you're seeing here is basically the best bang for your buck leases that are out there right now. And
Hmm.
if you look at the top one, I have a Jeep Wrangler 4xe, fair disclosure. It's the best bang for your buck lease. And then it's electric car, the Kia Niro, the Subaru electric car, another plug-in hybrid, electric. If you go down this list, there's a hydrogen car there,
Hmm.
the Hyundai Nexo, everything's electric, right?
Right.
And why is this happening, Amber? It's because on these new leases, the government allows the dealerships to roll in the value of the tax credit into the lease, right? So if you take a 3-year lease out on a car, right? Most people have 36 months, 10,000 miles, and there's a $7,500 tax credit on the sale of a new car. The dealership can actually roll that $7,500 credit into the lease. So it's effectively discounting the lease by about $200 a month.
Right.
What I mean? Who wouldn't want that, right? I mean,
Hmm.
this is a great incentive for electric vehicles. So I do think that you're not going to see as many sales as EVs as you are going to see leases to begin with. But I think this is going to drive the market. And also, when you're buying a new car, by the way, I don't know, like if you've looked at financing rates lately, they're like 8 or 9%.
Right.
Very, very high, right?
Hmm.
So, this has moved more people into leasing as well because you only have to pay the financing rate for 3 years, not 5 or 6.
Mm.
And on top of that, like I think that so we talk about new cars sold that are EVs as a percentage of all cars sold.
Right.
And I think that because of what we're seeing right now with these lease deals, that number is going to really surprise people this year.
Mm.
And there's a whole supply chain of stocks that are involved in making semiconductors for EVs and making batteries for EVs. A
Yep.
lot of them have been down the last couple quarters because of worries about that market.
Right.
But this is like one of those uh, trades that it continues marching forward throughout this decade.
Hmm.
Like it's going to have some pullbacks, it's going to have like pessimism, nothing goes up in a straight line. But by 2030, our auto fleet, and especially the new cars sold, are going to look a lot different than they look right now.
Hmm.
And I think that any opportunity to buy weakness in the EV space this decade is a great buying opportunity. So I'm going to leave it with that. And if you're looking in the market for a new car, check out the Kia Niro. I drove one for a week, and I actually was pretty surprised at how well it held up against the Tesla and also the Kia EV6. Those are nice cars, and you can get a lease for under $400 right there. There you go.
That's awesome. I'm looking at your list, and what's catching my eye is the Q8, the Audi Q8 e-tron, because that's just for me a good looking car. So you never know.
Yeah, a little bit of a hefty price tag, but yeah.
Yeah, it is cute.
No, those are nice. Those are like those big SUVs. They
Yeah.
actually make a Q4 e-tron as well,
Mm-hmm.
which is a little bit smaller, and
Yeah.
that lease is 585 a month. So
585. Yeah. I like big. I'm
yeah.
into big things right now. I just want protection on.
We know you're not getting your muscle car anytime
No,
soon, Amber.
no,
So
no. Awesome. Good information there, Ian. Okay, so I'm all ears. We're all ears on what's happening in Crypto Corner and your crypto to buy. I like to hear what's going
okay,
on.
so let's talk about Chainlink
Oh,
now. Um, we have the Bitcoin ETF, right? It came
mm-hmm,
out, and Larry Fink, who is the CEO of BlackRock, and BlackRock has $12 trillion in assets. I feel like I have to say that every time I mention Larry Fink's name. This is the man who controls $12 trillion in assets, right? He's like one of the most influential people in finance. He's up there with, Jerome Powell and Warren
mm-hmm,
Buffett and Janet Yellen, the Treasury Secretary. And there was an interview with him on CNBC after the Bitcoin ETF came out. And they said, what do you think is next for the crypto space? Because he was really the guy who was behind getting the Bitcoin ETF. Without BlackRock,
mm-hmm,
muscling their way with the SEC,
mm-hmm,
you would have no Bitcoin ETF. And they approved 11 other projects, 11 other ETFs. But really, the reason why they did it is because BlackRock has one, and they felt bad. Everybody else has to have one too if BlackRock can have one.
mm-hmm,
So they asked him, after the Bitcoin ETF, what's next? And he said, well, this is just the beginning. I believe this is the future of finance and that we're going to see the tokenization of real world assets. What
mm-hmm,
does that mean? Well, it means instead of having like a stock, which is, a digital thing that's at TD Ameritrade or, a bond at Merrill Lynch,
mm-hmm,
all of this data, the idea of like who owns what securities is going to migrate to a blockchain because it's just easier to move money around that way,
mm-hmm,
in a way that you don't need a centralized arbiter, right? If
mm-hmm,
you buy a stock right now, there are like clearinghouses, brokerage firms that you have to go through. You go to the decentralized exchange. There's a lot of hands in the pile. And then on top of that, we still have this archaic system, Amber, where it's like, you might see the stock in your account, but in reality, everything is like T+2 and T+3 settlement,
mm-hmm,
which means that like it's not really there for 2 days. Like we live in this digital world and you buy a stock and it's not really in your account until 2 days later, believe it or not. So my idea is that if you do migrate all these assets to a blockchain, you need to have a way to verify real world information on blockchains and in a way that like it can't be corrupted by one centralized individual or figure. And so what I want to share with everyone is something we recommended in our December issue, December or November? Late
It's
last year.
November.
November issue of Strategic Fortunes.
Mm-hmm,
The project is called Chainlink. This
mm-hmm,
is a crypto asset that's been around since 2017.
yep,
And what it does is it allows for what's called an oracle.
mm-hmm,
And what an oracle does, a decentralized oracle, what it does is just verify that real world information is what you say it is. Okay. And the best example I'm going to give you of how Chainlink would work is that imagine we had a smart contract, Amber,
mm-hmm.
and you and I bet on the Super Bowl. By the way, who do you have in the Super Bowl this year?
I'm gonna go with the Chiefs.
Oh, she's a Taylor Swift fan.
Love Taylor.
Okay, so let's say Amber takes the Chiefs
Mm-hmm,
and, I'll take the 49ers.
mm-hmm.
And we both put $100 into a smart, I don't know, Amber, now that you like that Audi R8, I feel like Q8, I feel like we should bet 500 on this, right?
Uh,
Okay. We
it's,
both put $500 into a smart contract.
mm-hmm,
And at the end of the game, the Chiefs win,
mm-hmm,
fireworks goes off, Taylor Swift comes running on the field, the whole world is happy, unless you're not a Taylor Swift fan. I mean, 10-year-old girls all around the world are happy.
yeah.
And Amber's also happy because she won our bet, right? But in order to settle this bet on the smart contract, we need to feed information into the smart contract. And
Mm-hmm,
in doing so, you would use a decentralized oracle like Chainlink because it would verify from multiple different sources who the winner is. Because the problem would be if, let's say, we were only using ESPN.com to verify who wins the Super Bowl, well, I mean, you could have an intern at ESPN.com that like hacks into like all the postings of who wins what game and
mm-hmm,
puts the 49ers there, and then I would get paid incorrectly, right?
mm-hmm,
And Amber would be upset, even
mm-hmm.
though she would be happy because Taylor Swift won, but she would be unhappy because she actually won the bet and she didn't get the
Mm,
money. And the
Mm.
problem with crypto and blockchains is that there's a finality of settlement. So it means that um, when you execute something on a smart contract
Mhm.
and you get paid, like you can't call customer service and say, hey, that transaction was wrong. Can you please reverse it? Like that doesn't happen.
Mm.
And so it's very, very important that the real world information that goes onto a blockchain to settle these smart contracts isn't corrupted. Now, I use the example of the Super Bowl, which is probably going to be, well, how much do you think is going to be bet this year on the Super Bowl?
Oh,
What do you think?
I don't gamble, so I don't know.
I know you don't, but it's
I don't.
something like 15 or 20 billion. It's something
Okay,
like
it's
crazy,
huge,
right?
huge number. Wow.
Yeah, it's like a huge number.
Mhm.
And I mean, people bet like $1 billion on the coin toss at the beginning, right? I mean, they bet like, like is the halftime show like going to go
Mhm.
over 15 minutes or,
Mhm.
there's like crazy bets in the Super Bowl.
Mhm.
But like, so the Super Bowl is one thing and sports betting is another, but derivatives, right?
Mhm.
Every option contract that expires, whether it be an option contract on a call option contract on Tesla or Apple, to settle it, you have to have a final price, right? It has
Mhm.
to go by the price that happens at 4 p.m. or 4:01 p.m. on expiration day.
Right.
And in order to get this information in a way that's not corrupted onto a blockchain, you're going to need an oracle, a decentralized oracle. Chainlink has been leading the way in this.
Mm.
Now, the stock has been, let me just go back to um, my charts for a sec.
Mhm.
So this is going all the way back to 2020. Okay, so the stock was at $1.60. A fair disclosure, I recommended this to our crypto subscribers way back in like 2019 at like a dollar, okay? And it went up to $45. It had an incredible run during the last bull cycle, one of many. And then came down and has been doing this like sideways pattern here for a year and a half, where it's gone from $9.50 to 5, 9.50 to 5. We had a breakout of that long-term um basing model, okay?
Mhm.
Uh, and now we're moving higher. And then we started kind of consolidating again, but now we're moving higher to 18. I think that like in crypto, this is one of the best bets on the cycle because you're going to need it for real world assets. And let's just listen to Larry Fink. Like Larry Fink says it's going to be a thing. He said Bitcoin ETF is going to be a thing. It's going to be a thing. If he says real world assets is going to be a thing, it's going to be a thing. One other thing I like about this chart, Amber, you ever hear
Yes.
this term? The longer the base, the higher in space.
Oh, I love
No?
that. I haven't
The
heard it, but I
longer,
love it.
okay, so this has been basing for a year and a half, right?
Mhm.
What happens when a stock bases? It's not that nothing trades, it's that there are people who don't have a longer term view on this sell to investors that have a long term view, right?
Mhm.
And
Mhm.
now you get to the point where you've got enough investors that have a long term view. They're not going to sell at $10, right? They're probably not going to sell at 15. So when this starts moving, all these investors who are buying it here at $6, $7, who believe, as I do, that this is probably a $50 or $100 crypto asset,
Mhm.
they're not going to sell. And we're seeing this move happen right now. And this is also one of the reasons why crypto like kind of stays dormant for a while. Ethereum and Bitcoin will stay dormant and then all of a sudden take off, is because you needed to get a lot of those people out that didn't believe that the future in whatever you were buying uh, was as bright as other people who did, right?
Mm.
So it's like you got rid of all the non-believers and doubters at this point.
Mhm.
You've been doing this for a year and a half, and now it's like the believers are left here, and the people who believe in this really believe in it. They're called the Link Marines, by the way. There's like a nickname for them,
I love it.
the Link Marines,
Okay.
and now it's taking off. So
Wow.
I just wanted to highlight that for everyone. If you are in strategic fortunes and you're able to buy, congratulations. I don't think it's too late. I do think that this is poised for a continued move because of the real world asset narrative.
I love it, Ian. Well, you're making us believers in
And we're
Link.
really not going to bet on the Super Bowl, right?
I'll watch it. I'll watch it for the.
Because I want to, I want to see the Chiefs win.
You do well. The reason why I'm choosing the Chiefs, love Taylor Swift, but it was that Netflix documentary that was it Netflix, I believe. Yeah, that followed the quarterbacks around, and I just like
Mhm.
hearing the backstory on each of their lives. I thought that was interesting.
Oh,
Featured,
I didn't see that.
yeah, check it out. It's a
Yeah,
good.
well, I mean, love to, but like with two kids, like there's,
Can't do it. Next time, Ian.
And
Next
lots of research like this. There's not much time for TV left over. I watched half of Barbie like last month.
Oh, you
And
did?
my wife and I joked that like, we watched like the first half of it,
Uh-huh.
and that's the last time we watched TV, and that was like over the Christmas holidays. And like since then, we just haven't watched anything. One of these days, we'll get around to watching the second half of Barbie.
Oh yeah, you'll watch it. For me,
I will watch the Super Bowl though. I will watch the Super Bowl.
Gotta watch the Super Bowl. Gotta watch it for sure. So that's great news there, Ian. All right, everyone. So that's it for this week. Thank you for watching, everyone. And if you do have a question for us, we love to hear from you. Please email us at marketinsights@banyonhill.com.
Awesome. Thanks, Amber. Thanks for everyone for tuning in. And hopefully we'll see some of you at Total Wealth Symposium.
Yeah, there. And Alex will be there too if you want to meet Alex in person. He'll say hello.
The meet and greet line's going to be pretty long, I bet.
We'll see how it goes.
See ya.
Take care, everyone. Bye-bye.